Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grubner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
I hope you are enjoying this glorious autumnal weather.
It is beautiful in Columbia, Missouri today.
67 and sunny here in the Mid-South, so I will definitely take more and more days like this. All right, so this week, not a ton going on for us to talk about. It's really kind of a slow USDA report for the next couple of weeks, but we're going to talk quarterly hogs and pigs. We're going to talk some restaurant performance and get into that demand and economy conversation. But to kick things off, let's recap what happened this week in the markets.
Yeah, for starting on the cattle side this week, fed cattle prices were basically unchanged this week. Those feeder cattle markets were down this week, anywhere from $5 to $10 lower. On the future side, the October live cattle futures contract was down $1, and the October feeder contract was down $4.10. We also lost on the choice box beef price this week, down $3.10. That now puts it almost $51 below where it was a year ago at this time. On the hog side, cash hogs this week were down nearly $2. The October lean hog futures contract was down $3.30. We also lost on the pork cutout value, down $3.70 this week. That now has it almost $13.50 below year ago levels. And we were pretty tough on bellies this week, down $15.40.
That, however, has not lowered the price of bacon at the grocery store, I will say.
Which certainly reminds us there's a lot of cost involved from the time we get belly to we get that bacon in front of Megan Grubner.
It's not me. It's the 4.5-year-olds who are very specific about their bacon request in the morning. I do want to talk a little bit, taking a closer look at these cash hog numbers, and really we can probably talk about it in general in terms of prices and what's going on. We've seen a pretty significant slide. As we take a look at these numbers, how much are we worried about what's going on with concerns about a global economic slowdown coming into what's happening here?
Yeah, so I think we need to pay attention. I don't want to be overly pessimistic here, but economic activity slowing, higher interest rates, driving mortgages higher, number of things that I kind of worry about what's happening in terms of dollars available for consumers to purchase pork and beef products in particular. So we're going to need to keep watching what's going on. And I think you and I all along this year have talked about, we've been in a fairly good place, but there's probably more downside risks and upside potential. And, given what's been playing out and some of the more general economic data we have of late, what one can get more concerned about what lies ahead for the next few months.
I think about terms too, as we see a higher value US dollar, what does that do for potential demand for US products on the global market as well?
Yes, I think that's certainly at play. It's frankly amazing what we've been able to export from a value standpoint, which again says export demand generally has been strong. I think it continues to be important to talk about those supply bottlenecks and how tough it is to get U.S. beef and pork into some of these global markets. So we certainly have our challenges, but again, we want to be paying attention to some of these signs that we see coming right now.
When we talk about risk management tools, what are some things maybe we need to think about? Maybe does an LRP come into play when we're looking at what's going on?
So I think those that are used to doing risk management, they know their strategies that work for them. I think it's for those that maybe don't traditionally think about risk management that we ought to remind them. And I think, USDA's LRP product is certainly one to take a look at. And I say that because, number one, the subsidies increased for using that product. But number two, even getting your feet wet. Maybe you don't want to LRP all of maybe your potential cattle that you could at one point in time, or maybe just want to do a few head just to get your feet wet, knowing how to use these risk management tools. I just say it is worth a look. And trying to call the highs. So I didn't come on here today to say everybody should LRP today because it's going to make them a lot of money. It's all about reducing risk and figuring out on your operation when you need to do that. But there are some much better products, and LRP being one of them than we've seen in the past.
It's about singles and doubles, and less about triples and home runs and grand
Unless
slams.
you're Albert Pujols.
I'm not a Cardinals fan, so I can't help you there. But I hear he's doing great things.
Yeah.
All right, let's talk slaughter numbers as we take a look at those. How are we running on the cattle and hog side of things?
Yeah, so USDA is estimating a run as of the week ending October 1 of 664,000 head of cattle. That's 3,000 head less than where we were a week ago, but 24,000 head more than where we were a year ago. On the hog side, a run of 2.526 million head this week. That's 12,000 less than a week ago, but 9,000 more than a year ago.
Where are we running in comparison to where we were a year ago?
Yeah, so we continue to see cattle slaughter above year ago levels, up 1.5%. Hog slaughter down 3.1% so far year to date.
Quarterly Hogs and Pigs reports is the big one that came out this week. As we take a look at those numbers, talk to me a little bit about your takeaways from this September 1 Quarterly Hogs and Pigs report.
Yeah, so I was looking forward to this report. I was kind of curious to see what USDA would provide us in terms of what pork producers have been doing and whether there's been any kind of expansion trying to happen. And the report generally tells us no expansion. And you look at kept for breeding, it came in at 99.4% of a year ago, very near the pre-report midpoint. Marketing's number of hogs on the marketing side, 98.5 of a year ago. Towards the low end of, a little outside the low end of the range, but again, for me, I look at this report, it's a lot of sideways as we think about production in 2023 out of the report. I guess I say high feed costs have kept producers from having much incentive to expand. I kind of wonder if the cost of other inputs like concrete, et cetera, if I want to expand, it's also kept those expansion plans slowed, as well as, do I really have a place for additional hogs in that plant, given some of the labor concerns that we have. So I think there's a number of things that have kind of kept us in check on the hog side of the equation.
And as we look ahead, definitely we're definitely not planning for expansion anytime soon, but I feel like we're not contracting at the rate that we were.
Yeah, that's definitely true, Megan. After what's been a contraction, and again, remember we're down 3% in terms of hog slaughter year to date thus far. That came with a reduction in breeding inventory, et cetera. We're now talking about more sideways. Now, I will say, if you look at farrowing intentions, which actual farrowings and farrowing intentions can be different as we go through time. That data from USDA says, not a lot of growth. Except through November, intentions came in at 97.5 of a year ago. That was outside the low end of the pre-report estimates. And Dees through February came in at 99.4% of a year ago. That also fell a little bit outside the low end of the range. So doesn't seem to be a lot of interest in trying to push farrowings as we look over the next few months as well.
Let's talk restaurant performance as we wrap up today and really kind of thinking about things from the consumer side or the demand side of things. How does that report look for August?
Yeah, so I'd also almost say a lot of sideways when we look at the data, but when you look at the August 2022 data, it was up 0.1% in August relative to July. That was by and large due to what was a 0.4% increase in the current situation portion of that index. Some stronger same store sales, as well as higher customer traffic were the pluses there. Labor was the drag on that current situation index as restaurants found labor supply pretty tight. Expectations portion of the index was actually lower, down 0.2, and it's not too surprising that just as we think about some of the economic drag that we're seeing some of that, I think, come through in that expectations part of the overall restaurant performance index.
It's really it for us this week. As we look ahead to next week, what reports are on deck?
Yeah, so we're going to get monthly trade data late next week, and we'll finish out with the jobs report at the end of next week, Megan.
It really is kind of a quiet first couple of weeks as we take a look at October reports, and then everything picks up and it'll be fast and furious into the month.
And let's hope these livestock markets don't give us any twists and turns that make it even more difficult to talk about. But no big reports for sure.
I would like to see a little bit more green on the board and some more black ink as well. But it's been a really tough stretch of run here lately.
It sure has. And yeah, maybe I should rephrase to say I'm more than happy to talk about much higher prices. Let's hope the markets don't have some surprise that makes us talk about more weaker prices as we look ahead.
Most definitely. Scott, have a great weekend. I will not see you next Friday. It'll be a couple of weeks for me. Brent Barnett, who is our anchor reporter based in Iowa, will be filling in, and I trust that everything will be in wonderful hands. So I'll see you in a couple of weeks.
Sounds good, Megan.
Show up our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And to see what's going on the grain side of things, check out the weekly commodity market update with Ben Brown and Brownfield's Phil Robinson. Have a great weekend. I'm Megan Grebner for Brownfield.